Welcome back, YouTube. The purpose of this video is to present two real-life examples that came across my Instagram stream by self-proclaimed social media crypto experts, then to use my 12 years of options trading experience to offer up my opinion on them and why they should be taken with a grain of salt. For convenience, I will break this video down into an internet-friendly, numbered list consisting of 4 parts. Part 1. My opinion on the current crypto ecosystem. Part 2. The first real-life example of a crypto Instagram post, which was posted in an attempt to bolster the credibility of the poster's ability to predict short-term price patterns in a cryptocurrency, which could easily be explained away with a cursory understanding of bid-ask spread and how trading actually works. Part 3. I'll present the second real-life example of a crypto Instagram post, which employs one of the most overutilized strategies, which attempts to showcase trading prowess by way of observing technical trading patterns. In this particular post, the expert offers up a buy recommendation, which he arrived at after analyzing Bitcoin's price chart. In this instance, I'll show what would have happened if you had taken the expert's advice and show how much money you would have theoretically lost if you had listened to him. Part 4. The conclusion. My opinion of how a person should think about crypto and potentially investing, as well as how one should digest information put forth by supposed social media crypto experts. Part 1. The crypto ecosystem. Love it or hate it, crypto is the hottest thing out there and, for at least the short term, is absolutely here to stay. Millions and millions of advertising dollars put forth by the crypto industry itself has made its existence both omnipresent and wholly unavoidable, in what I consider a successful bid to present crypto's irresistible allure. Couple this with the multitude of anecdotal stories that we have all now heard of the rags to riches millionaires who had the guts to take their shot in crypto, and we in society are left with an ecosystem that can be described as the perfect storm for worldwide FOMO. Anyone who is still sitting on the sidelines, myself included, can't help but wonder if we may be missing out on the greatest opportunity of our lives. Now, add pandemic effects to the mix, which in general has given individuals both more free time, as well as some spendable cash, courtesy of government solutions enacted to mitigate the damage and spread of the virus, and it would be an understatement to say that ripe grounds have been sown to allow for industrious and entrepreneurial individuals to reach out to those of us still sitting on the sidelines in an effort to get us to hop on the crypto bandwagon. I feel that segues very appropriately into our first real-life example. Part 2. The following is a perfect example of the scenario that I just described. A post designed specifically to reach out to and impress viewers by showcasing a crypto guru's short-term predictive ability in cryptocurrencies. The post, as you can see, boasts about a skyrocketing Dogecoin price that is purportedly the result of an initial post that the expert made just 5 minutes earlier. Now, at this point, and very justifiably so, you as a listener may be expecting and asking for me to also produce the guru's alleged post with a timestamp, thereby validating his claim that he successfully predicted this short-term skyrocketing effect in Dogecoin. Unfortunately, but not unsurprisingly, I could not find it. I doubt that this comes as a shock to any of you. You see, trading experts are really good at telling you what they would have done when you pull up a historical price chart, yet rarely ever post real-time what they are actually doing. However, the reason I selected this specific example is not to highlight the risk of listening to Monday morning quarterbacks and believing they are savants. I feel mentioning that adds zero value. Everyone is already aware of this risk. The reason I selected this specific example is because even though I couldn't find it, that initial post may very well exist. Because making that skyrocketing prediction actually become true and thereby validate that initial post in this specific example is actually quite easy to do. The answer is the bid-ask spread, liquidity, and market impact, sometimes referred to as slippage. We'll start with the bid-ask spread. In every stock or cryptocurrency, you will see 2 prices, the bid and the ask, sometimes referred to as the offer. The bid is the price that you can sell your security at to the market, and the ask is the price for which you can purchase the security from the market. As you can see in this example, Dogecoin's market is currently spot 1413 at spot 1443. Now, that's actually a kind of wide market. It's over 2% wide. Now, that skyrocket that was proclaimed just doesn't seem that impressive when it's brought to everyone's attention that the move was just slightly larger than the current width of the bid-ask spread. Crossing these bid-ask spreads are a huge hidden cost that many rookie day traders may not be completely aware of, and even worse, hugely underestimate its long-term consequences on day trading costs, which, when coupled with exchange fee costs, destroy the dream of many day traders over a longer time horizon. In an effort to really hammer this point home, I had drawn a couple lines to highlight the bid-ask spread on this Dogecoin stock chart. I hope it graphically illustrates the impact of wide bid-ask spreads as a hidden cost to trading, a cost that some people may call a security price skyrocket. I also wanted it to reveal the fact that in securities with wide bid-ask spreads and low liquidity, if I decide that I'm going to initiate a trade of any reasonable size, then I'm going to cause market impact in the underlying security. Furthermore, due to this, I could simply post a prediction about the price movement in the security. Why? Because I know that I am literally the one who's going to affect it in this way. And, as a consequence, a post like this can easily masquerade as savant-like price prediction, when in truth, it's only something someone posts before they and their buddies decide to buy a few $1,000s worth of some illiquid crypto. Let me put on my guru hat right now and create a post that claims I predict a correction in this short-term skyrocket. Then, I simply sell 100 shares of Dogecoin and send this crypto right back down to spot 1413 and post a picture. And that would only cost me $14.13 to do so. So, to reiterate, the problem that I have in this specific example is that a social media crypto guru can, with a minimal cash outlay, essentially make his predictions come true, so that he can take advantage of the naivete of unknowledgeable crypto-curious individuals in a bid to garner attention and build street cred. And what they can do with that newly gained credibility presented itself a couple minutes later in his next post. Don't buy the top, buy bottoms. Wow, okay, I don't need to explain how that piece of wisdom has literally zero value, do I? But hang on. What you will notice is that accompanying this worthless advice is a link that allows a person to click on, create an account, and dip their toes into crypto trading. Yes, now crypto would appear to be adding a layer of multi-level marketing to its platforms, in which people are encouraged to get others to join, and in doing so will be rewarded monetarily for their referrals. And now I completely understand why my Instagram stories are completely flooded with these. Segue to part 3, the final example. So, riding high on confidence, what did the guru do? Well, he brought out the big boys for this one, a Bitcoin buy recommendation. What you're seeing, and you probably see across all your social media platforms, is a social media guru employing technical analysis in order to make a trade recommendation. In this particular scenario, he was kind enough to draw in exactly what a cup and handle pattern looks like. He also tagged it with the colloquial classic cup and handle buy pattern. Get involved. Time to buy some. Now, this was the third in a series of 3 chronologically posted Instagram stories from the guru. He was clearly riding high after his skyrocket prediction of Dogecoin, which he followed up with that pearl of wisdom of don't buy the tops, only buy the bottoms, and the convenient link that was also applied. But now that he has your attention, he decides to make a prediction in Bitcoin. Once again, enticing us sitting on the sidelines to follow the link, sign up, so we can also get involved and make some money as we take his advice and buy Bitcoin. And he can also pocket some cash from referrals. Well, it's about 10 days later now, and if you're curious, like I am, let's go pull up Bitcoin right now and see how this prediction worked out. Was that advice good, or did it not work out so good? Oof, looks like Bitcoin's down about $6,000 from where we would have bought it. That's no fun. And it's especially no fun if you, like many others getting into the game, like to trade with leverage. If you had ponied up with the cowboy style 10 times leverage that lots of crypto day traders brag about, you would have gone busto. You would have less than zero in your account. You would have been margined out before today. Now, in fairness to this guru, a couple days after the buy recommendation, Bitcoin was higher, and in theory he could have sold it out and collected a profit. Whether he did or didn't remains a mystery, and there's been no posts following up to these. However, I imagine if you ask him, he would have told you he did, and he also probably would have told you he did the trade with 10 times leverage. Because why wouldn't he? Maybe the next few days we'll even see a post talking about how he flipped that and went short. Because, well, clearly he had recognized a new head and shoulders pattern or some other shit occurring to him that told him to flip from long to short. For more tips, click the link below. He needs some referral money. Get involved. In closing, I want to offer my opinion and advice for those looking to get involved in crypto. At this point, you may feel I've painted a very negative picture. However, I don't want that to be the case. What I attempted to bring to light was first the crazy ecosystem that I feel crypto exists in, and the huge sense of FOMO that it permeates across society. Inside that ecosystem, there is an ever-growing onslaught of non-valuable information being put forth by people looking to garner quick profits and increase more overall hype in crypto, while only offering up empty parlor tricks in return. I vehemently stand by my opinion that no one should get involved in crypto solely for day trading purposes and the allure of quick cash. Ignore these short-term trading strategies or trading advices that the vast majority of social media puts forth regarding cryptocurrencies, and instead invest your time in long-form discussions expounded in literature and also some various YouTube videos that spend the time unpacking the long-term value and sustainability of decentralized cryptocurrency, as well as other benefits many of these newly minted cryptocurrencies can add aside from existing simply as a fiat currency. Make your decision on whether you invest in crypto based solely on that and not on hot take technical trading patterns predicting near-term price moves. I can assure you that your long-term success of day trading cryptocurrencies by listening to self-proclaimed crypto trading experts on social media will be zero. If there actually exists a successful short-term trading pattern that can make a trader millions of dollars, the last thing they would ever do is share it with the rest of the world. Doing that would render the strategy useless and zero profits would result as a consequence. At any rate, I've been told by a lot of people that the water is warm. They're all telling me to jump in. I'm not sure if I will, but if I do, I want it to be for the reasons that I believe in.